O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic weekend. Getting back to some normalcy as far as 5-day weeks are concerned. Let's take a look right now. We got all this wind coming in from St. Pete. It's actually been quite cold here, which has been lovely, but I'm getting phenomenal allergy attacks. And as I get older, I don't think it gets better, apparently. You had the SPY off about, kind of sideways right now, at least currently. You're off about 0.02%. And the SPY trading at 580. So, we're testing a little bit earlier that gap up of around, give me one moment here, around November 6th. See if we can reject that for today and potentially move a little bit higher. But I don't see necessarily any catalyst for that right now. Probably, if anything, you get just some form of consolidation around these levels. Of course, we are going to have Steve Rhodes on today, and he's going to share with us some of his analysis. He, of course, is the author of Mastering Probability. He is the host of The Trader's Edge on at 11 a.m. Eastern Time right here on TFNN. We got the composite off about 0.69% at 19,032. The Dow Jones Industrial actually up 0.75% at 42,251. And you have the Russell off about 0.12% at 2,198. Dollar still pretty strong, comparatively speaking, right? We had a high of 110.17, trading right now at 109.90. Crude oil definitely having a moment here, especially with increased restrictions on Russian gas, I believe, into China and India as well. Russia obviously saying we're going to continue with our gas projects, but regardless, it is sending that crude contract up a little bit. Trading right now at up 2.95% at 78.83. Gold, not really catching a bid in this market, right? Of course, you have the bond prices going down. You're getting yields continuing to kind of go up a little bit. We'll talk a little bit about that later in the show. You have gold contract off about 1.35%, 2,678. You have copper up about 0.42% at $4.32. Continues to be remarkably strong considering the other metals we look at, which is gold and silver. And silver itself off 3.25% at $30.29. At least on my end, with some of the more like micro caps, small caps that we've been following, just because they've been getting so much attention over the past couple months, that's all gone. I mean, these things are getting slaughtered by, let's take a look here. Some of the ones we were covering. Of course, you have Seal SQ, that's off 40.68%. You had Wise Key, that is off 13.92%. One of the guys that's been getting a lot of attention has been this Cooler Tech, off 13.66%. All these guys are just getting smoked, right? Talking about Quantum even, I think it continues to get eroded today. Look at that. Look at that. Qubit off 27.83% at $6.48. Rigetti, excuse me, off 31.47%, and then IonQ off 14.44% at 27.69. I mean, that is capital destruction right there. The comments that Jensen Huang made, at least regarding Quantum, were kind of compounded by Mark Zuckerberg going on to the Joe Rogan Experience, his podcast, saying they're about 10 years out from Quantum as well. And it's just, it's a tough spot right now. You have concerns about inflation continuing to go. You have more people discussing, the potential that we get an interest rate increase, which can kind of mess this up. Obviously, you have everything with chips going on, where you have Joe Biden extending kind of the AI chip restrictions. NVIDIA is obviously upset with that. TSMC is upset with that. You have AVGO to some extent doing okay, comparatively speaking. You're up about 0.12%. You were a little bit higher this morning as well. But, there's this idea that, you're having inflation still, being somewhat elevated. So you get the restrictive policies still somewhat in place. I heard someone arguing that it wasn't really about inflation, but it was more about the strength of the economy and how long that can actually persist, right? It has nothing to do with restrictive policy. And they brought up the JOLTS number on the drop, and I think to that argument, what it really is the Fed does see that as kind of a source, right, of inflation. They can only really affect demand side. They can't really affect supply side in any capacity. So, increasing unemployment is extremely important for the Fed, at least at this moment, or at least it has been historically, and they definitely were speaking about that when they started increasing interest rates. So I still think a lot of this is the threat with the inflation, the Fed being worried about that, and the U.S. market still being relatively resilient to some of the control mechanisms the Fed have in place. I don't think that changes anytime soon. I don't see a catalyst for this switching back and we rally to the upside. I think you might get some contraction going forward with things like NVIDIA because of the AI chip restrictions. I think you're going to get a lot of capital expenditure from some of these large hyperscalers that's not going to see immediate return in the near future, right? And that can be catalyst for even further movement to the downside. I mean, you look at Microsoft, right? They're off 0.57%. They're about to dump a bunch of money, and this is a big move, right? I mean, you're at 456 all the way down to 416 right now, just in a month. They're about to dump a bunch of money into building out these data centers, and if the markets are suspect on equities, having a huge capex for this kind of stuff is not necessarily appealing. So, as it stands now, I am in cash. Okay, some of my stocks that I hold, like things like Nebius, which is actually doing quite well today, those are things that I think are financially healthy, and probably in the near term, the companies that are going to get the attention are ones that are financially healthy, right? Maybe no more of this speculative kind of like hyper growth at this moment. I mean, you're seeing stuff, at least in the more speculative like aerospace industry, like Lunar off 6.83%, PL off 4.04%. Not necessarily this is aerospace, but in a way, I guess it is. But Archer off 7.38%, right? So these are stocks that have been doing extraordinarily well at the end of last year because people were very hyped on equity and they're pricing in growth. And while some things like Nebius, I do believe are growth stocks to some extent, what differs between companies like Nebius or DCO, even Ducom that we were talking about, is that they have healthy financials, right? And so if equities get any attention in the near term, it's probably going to be things like this. Folks, stay there. We'll be right back with Steve Rhodes, author of Mastering Probability, right after this break.